Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, I'm going to talk about the September property news. There is so much going on at the moment. We've got a lot to cover. So let's jump into the content. But first, I'm going to ask you, if you haven't done or you're new round here, make sure you subscribe to the channel over there and hit the bell notification. We have new content every single day with property news, with strategy and all sorts of wonderful stuff like that. So do subscribe. And while you're here, let's get this video out to more people by smashing like, tickling like, doing something to that like button. That really helps me with the YouTube algorithm, and I appreciate everybody that does it. So August, normally it's a quieter month because people go on holidays, school holidays, and other people take time off. But a lot happened in August. So I want to talk about what that means for us in September and what we should be looking at, because there's actually quite a lot expected to happen in September. You see, we've got the Federal Reserve, the Americans, are likely to cut interest rates in September, and potentially it could be 0.5%. Now, if that happens, that would give the Bank of England more wiggle room for them to also potentially cut in September. So that's one thing we've got to look out for. So what happened in the last month or so? Well, the Bank of England, they cut interest rates at the beginning of the last month by 0.2%. A lot of people were not expecting that. The markets hadn't even priced that in as likely to happen. But very quickly, about 24 hours before this actually happened, the news started coming out that this was likely that the Bank of England would cut interest rates. Now, this is off the back of the fact that inflation is actually rising again. We hit the 2% target. We've gone back to 2.2. We were expected we might hit 2.3, but the data that came out in August, so July's inflation data that came out in August was 2.2, which, although it was up, was significantly better than we were expecting. So we have to keep an eye on that. So the Bank of England cut rates, and that impacted some other stuff that I'm going to talk about here. Now, house prices. So house prices were actually down in August, 0.2%. Not loads, but they were down. And that is probably because a lot of people were waiting for this Bank of England interest rate cut. Now, you've got to think about all the transactions that completed in August. They started like early summer. And so they, at that point, we had, prior to a general election, people were waiting to see what happened. So that slowed down the market. Interest rates were a lot higher. Mortgage interest rates, the rate that you pay and the rate that I pay, were a lot higher, about 1% higher than they are today. So that made a big difference to that. And we've had a interest rate price war. So transaction volume at the time that these deals would have started was down. There weren't many transactions happening, and mortgage companies were starting to want to get busier. So they started a price war with each other, which was really good for us. We've actually seen some really cracking rates, which I'll cover as well in a minute, that have made a big difference to a lot of people. So that started the market moving, but it's a bit late for the August data. You'll probably start seeing house prices creeping up a little bit more later in the year. Now, on an annual basis, so house prices on an annual basis are actually up. And they're doing quite well, 2.4% up. Now, a lot of analysts are expecting for the year of 2024 that house prices will be up 2.5%. So a little bit more than they are now. So even with house prices dropping, we lost, because this is on a 12-month rolling average, right? So we also lost off that rolling 12 months. A month where house prices had gone down. So we were able to still go up on an annual basis. So 2.4% up is not bad. Now let's talk about interest rates. Well, we've had, I'm just going to talk about the best deal that I've seen. We've had some deals now back at the 3.49%. This is a buy-to-let mortgage. There are fees on that mortgage as well, so you've got to take that into account. But 3.49% is really, really good. I locked in at the beginning of this year 3.99%, and I thought I'd done incredibly well at the time. So the fact that you can get 3.49%, that's with the mortgage works. So if you're looking for a buy-to-let property or you have one and you want to do a refinance, Mortgage Works have got some cracking deals, and expectations are that they'll still improve even more. There's already some data out this week saying lenders are going to be cutting rates again this week. So I'll be talking about that as soon as we've got all the data and what the new rates are. But that's a positive start to September already. What's not so positive is the plans for stamp duty. So stamp duty at the rates that we've got expires in March. It's looking like that won't get extended, and it's looking like stamp duty, the thresholds will drop, meaning more people will fall in to having to pay stamp duty. An example is if you have a first-time buyer right now, if the property is under £450,000, they don't pay stamp duty. On the new terms, if the property is under £300,000, they will pay stamp duty. That's a huge difference and will make a big difference to people. Stamp duty is a big upfront cost. So let's just say you're buying somewhere after March next year for $350 as a first-time buyer. It's going to cost you significantly more. You're going to need more money as well as your deposit. Not great. So that stamp duty stuff is a new Labour thing, and I don't think that it's going to make much positive news for a lot of people. What is good though is the market activity is 25% up. So there are lots of new buyers that have come into the market. Now this is because we've got mortgage rates that have dropped, and that's really the main driver of this. So a lot of people could afford to buy, want to buy, but they just didn't want to buy at peak mortgage rates. Last year we had rates of 6%, 7% for a lot of people. Now we're getting some rates at 3.49%. So when the Bank of England cut rates, that was a real positive message. And a lot of people started making inquiries with estate agents, which is going to mean that there's going to be more transaction going through before the end of 2024. And I can only see that would keep the market either flat or moving it up. I don't see the market going down much more this calendar year. So interesting stuff. It's been a great month. Next month, I think, is going to be, well, this September now. This month, I think, is going to be interesting. The things we've got to watch out for, as I said, is the Federal Reserve. I've already got plenty of lenders that I'm aware of, press releases that I've seen. Rates are being cut already in September with mortgages. So I'll be making some updates on that. So that's another reason to subscribe and hit the bell if you don't. Do make sure you like this video, tickle it, smash it, do something to that button. That helps me with the YouTube algorithm. Anything big that I've missed, comment below. Any thoughts, opinions, or even if it's just to say hi or thanks, do always comment on the videos. I always reply to every single comment, and that also helps YouTube. Do check out all the other content on my channel, including this video right here.